Friends, it's indeed a great pleasure for me to welcome all of you to this session on how should a real estate company recognize revenue as per IndAS 115, that is on revenue from contracts with customers. Incidentally, it was couple of days back in one of the discussion with few professional colleagues, this topic cropped up in the discussion as to what is the right approach for recognizing revenue by a real estate company as in accordance with IndAS 115. There was some confusion with regard to as to how a real estate company which is selling the flats or commercial premises to the customers, where the arrangement is that the customer signs an agreement with the builder, and that contract will have a schedule of completion of the flat or the commercial office, and there would be corresponding obligation on the part of the customer to make the payment as and when a particular obligation, a particular phase of the flat or the commercial office has been completed. So from there, the idea of this webinar cropped up, and that is how we all are here. Friends, I intend to make this webinar an interactive session. So it's not that only I will speak. All of us belong to the finance community, the accounting community, the auditing community, and therefore I am sure all of you will also have your own thoughts and your views and your ideas with regard to the various things that we are discussing in this webinar or in this program. So please feel free to contribute as and when you want to add something or say something. So we start with a small case study just to ensure that all of us are on the same page. XYZ is a real estate company developing a commercial cum residential project in Nagpur. Offices and flats are sold by entering into agreements with the customers, where the developer is obliged to complete the contracted offices and flats in phased manner specified in the agreement, and the customers are obliged to make payments again in the phased manner linked with the stages of completion also specified in the agreement. All these agreements are duly registered with the Office of Registrar, Maharashtra State. Now this is the case study that we had. Now what are the points of discussion? So the points of discussion are: should the revenues be recognized in point in time basis or on over time basis, in this case following IndAS 115, that is on revenues from customer. Now let me tell you at this point in time, friends, IndAS 113 talks of two methodologies for revenue recognition, two modes for revenue recognition. One is point in time and the other is over time. So the transactions of selling of the flats or selling of the commercial offices can happen in two ways, in two modes. One is point in time, and point in time would mean that the flat is ready or the commercial office is ready with the builder. The customer walks in, and both the customer and the builder enters into a negotiation, agree for the deal, and then since the flat is ready or the office is also ready, so the transaction happens in very quickly, where the customer makes the payment of the entire amount and the builder gives the possession and hand over the flat to the customer, and that is point in time. That is mode number one. Mode number two is overtime. So overtime is what typically we all have experienced. So when we bought our flat from a builder, what we did, the project was under completion. We went to the builder. We liked a particular flat or a particular office premises, and we knew that everything was under construction. So we negotiated with the builder and we signed an agreement with the builder, whereby in that agreement builder listed out the stages in which the project is going to be completed. That means the flat or the office will be completed in the phased wise manner, and this agreement also incorporated as an obligation for the customer to make the payment to the builder again in phased manner as and when a particular stage of the project or of the premises was completed. Now, we are not talking of the situation that is point in time. We are discussing this case over time. Point in time, as I said, flat is ready and you sell it. And point over time is project is not ready, project is under implementation, under completion, and you enter an agreement with the builder for purchasing a flat or for purchasing an office. That is the discussion that we have, and our discussion is how should the builder in this case recognize the revenue when he is selling a flat or an office which is not yet complete, which is going to be completed over a period of time, and for which he will receive payments from the customer over a period of time. So this is where the point of discussion is: at what stage should the builder recognize the revenue? Should he recognize the revenue as and when a particular stage is completed for which he receives the money, and keep on recognizing the revenue in this fashion until the time the entire project is complete and the office or the flat is handed over to the customer? So our point of discussion is this the way in which the builder should recognize the revenue which is over time, or the builder should not recognize the revenue during this intervening period? He should recognize the revenue only when the entire project is complete and when he hands over the possession of the office or of the flat to the customer, whether he should recognize the revenue at that point in time. So that is the point of discussion that we have. Now, I am not giving any thoughts or any ideas from my side. I would like it to be an interactive session, and I would like to hear from all of you also as to, in your opinion, at what stage the builder should do the recognition of the revenue. Should he do it over a period of time as he completes the project and receives the money, or should he recognize the revenue only when the entire project is complete and when he hands over the possession to the customer? So now, before we move forward, let me pause for a while and make it open to every one of you, and I would like all to hear from all of you as to how you think, at what stage or in which mode the builder in this case should recognize the revenue. It is now open to all of you for next 3-4 minutes. You can come up with your responses. Yes, Srinath, what is your response? Yes, Srinath, what stage should the builder recognize the revenue?
The revenue should be recognized based on the percentage of completion of the project.
Okay, incidentally, we are talking about IndAS 115. We are not talking about AS7. Remember, we are specifically discussing IndAS 7. That means we are talking about the entities to which the Indian accounting standards are applicable. And in IndAS 115, which is applicable to all the listed entities or the entities which are in the process of getting listed, their securities either in India or outside India, or any entity which is a subsidiary or joint venture or an associate company of a listed entity. Uh, so, to all these entities, IndAS 115 is applicable. And now, please remember, in case of IndAS 115, there is no concept of percentage completion method or project completion method. There is no such method uh, prescribed in case of IndAS 115. IndAS 115 says recognition of the revenue either point in time or which can correspond with, in a way, project completion method, or it is over time, which means the revenues are to be recognized over the period as and when the builder is completing a particular stage of the project. So, percentage completion method is not there at all as far as IndAS 115 is concerned. Anyone else, please? Okay. Sorry. So, if there are no responses, we will move forward. Yes, Sagar, please go ahead.
Hey, hi Pramod.
Yes, Sagar.
So IndAS 115 specifies that for some some revenue over time, IndAS 115 has given three conditions, out of which if any one of the conditions satisfy, then and only if
Sagar, let me interrupt you at this point in time. See, at the moment, our question is straight away. In this case that we are discussing, how should this builder do the recognition of revenue? We will discuss about the condition as we move forward. But at the moment, our question is whether in this case that we are discussing, the builder should do the recognition of the revenue only after the entire project is complete, that is point in time, or as per IndAS 115, the builder in this case should do the recognition of revenue as he fulfills the different stages of the obligation that he has committed to the customer. That is the question that we need to respond. So, which of these two, in your view, Sagar, is the mode of revenue recognition for the builder in this case?
so Pramod, I think I joined a little late, so I was not able to read the case, so I won't be able to, I think, answer your query on that.
Okay, case is very simple, Sagar. Case is, we go to a builder, signs an agreement with him. The project is under completion and it is going to be completed in next 2 years. And the builder in the agreement talks in terms of different stages in which he would be completing the project, and he gives a schedule at that. And correspondingly, I as a customer agrees for making certain payment as and when that particular stage of the project is completed. So this is the simple case that we are talking about. And the question here is, at what stage or how should this builder do the recognition of revenue? Should it keep on doing it as and when the project gets completed, or should it do it at the end when the project is completed in all respects and he hands over the possession of the flat or the office premises to the customer?
Then it should be only after the possession is handed over to the customer.
Okay, very good. So, Sagar, according to you, during these 2 years when the project is getting completed and the project is getting completed in the stages, and for completing those stages, the builder is getting regular payment from the customer. So, according to you, even though the promised stages are getting completed by the builder and he is also receiving payment from the customer, so according to you, that all these payments which are being received by the builder should be recorded by him only as an advance, and he should do the revenue recognition only at the end of 2 years when the project is completed. Am I right? Is that what you are saying, Sagar?
Yes, correct.
So during these 2 years, no revenue recognition, or revenue recognition only at the end of the second year, at the
Correct.
end of the project completion. Okay. Before we move forward, can I ask you what is the reason for you to have this, to recommend this approach?
Because control is the control of the flat or the property is not getting transferred to the customer.
Mm-hmm.
So IndAS 115 says that for you to recognize revenue, the control should be handed over to the customer of
Okay.
the goods or services.
Mm-hmm.
So in this case, till the time we have not handed over the possession to the customer,
Okay. So,
both the parties,
okay. So according to you, control is passed only when the possession is given. Signing of the agreement, which is getting registered with the Office of Registrar, Government of Maharashtra, according to you, that is not passing on the control of the office or the flat. Is that correct?
because all agreements are generally all agreements are cancelable under RERA. So either the customer can cancel the agreement at any point in time.
Very good. So that means what? Till the time, okay. Till the time the agreement is not cancelled, it is enforceable, isn't it, or it is enforced? Only when it is cancelled, the question will arise only when it is cancelled. So till the time it is not cancelled, it is enforced. Is that correct, Sagar?
Yes, correct.
Okay. So that means till the time it is not cancelled, you will have to assume whatever is mentioned in the agreement and not otherwise.
Yes, correct.
Correct? Huh? And only when the agreement is cancelled, then the matter is over. Because then, of course, since the agreement is cancelled, the question of revenue recognition does not arise because the agreement is cancelled altogether. Okay.
Correct.
So anybody else? I would like some of you also to respond. I have got views of two people, and the whole idea, why I'm encouraging all of you to participate and give your views, because unless we do that, we will not be able to grasp the nuances of IndAS 115. Okay, so let's move forward. Now, what I'm going to cover, just to keep all of us on the same page, let me share with you what all are we going to cover in this session. For us to understand the nuances of IndAS 115, we really have to deep dive into the entire matter, and therefore we will start the discussion with purpose of financial statements, and then qualitative aspects of financial statements from the IndAS framework. Then we will talk about presentation of true and fair view and compliance with IndAS, objective of IndAS 115, scope of IndAS 115, defined terms under IndAS 115. So there are certain terms which have been specifically defined under the IndAS 115. We will have a look at them and understand as to what those terms are, because those terms definitely are relevant as far as IndAS 115 is concerned. Then we have just spoken already about it as to what is overtime and what is point in time delivery. So we will also understand this in more details as to what is the meaning of overtime delivery or point in time delivery. Then we talk about performance obligations satisfied in case of overtime versus point in time. Then of course identification of contract is very crucial. So when a contract is to be identified, what are the conditions applicable for the identification of contract as per IndAS 115? That is what we will understand. Identifying performance obligations. So what are the performance obligations which form part of the contract? That is what we would understand. And distinct goods or services. Thereafter we will look at satisfaction of performance obligation, how to know that there is a satisfaction of performance obligation, how to measure or measuring progress towards complete satisfaction of a performance obligation. Now, having discussed this, we now come to the critical aspects, and that is, will the financial statements reflect true and fair view when revenue is recognized based on point in time, when in reality what is applicable is over time. So that is what we will understand. So that in case if the revenue needs to be recognized based on over time, but if the revenue is recognized following the mode of point in time, now if that happens, will the financial statements of this entity reflect true and fair view? That is the point that we would discuss. Impact of point in time revenue recognition on the financial statements when over time basis is relevant, and that is what we are discussing and focusing. तो अगर what is relevant in a given case that we are discussing is delivery over time, but we do the revenue recognition following point in time, then what will happen to our financial statements, or what will happen to the financial statements of this entity? That is what, or the impact that will have on the financial statements of this entity. That is what we will understand. We will also look at the impact on the key financial indicators. We all understand it very well that for any entity it is important that is key financial indicators are sound and strong. नाउ अगर हम हमारे इस केस में रेवेन्यू रिकॉग्निशन करेंगे फॉलोइंग point in time delivery and not over time delivery, then how the financial ratios or key financial indicators will get impacted? That is what we will understand. We will also look at ICDS, because ICDS, as we know, income computation and disclosure standards are relevant more from the perspective of the income tax liability, and therefore it is necessary to understand the ICDS as well, because if an entity is recognizing revenue following point in time delivery, whereas what is relevant in the given case is overtime delivery. Obviously, as someone just now very rightly said, someone said that the revenue will be recognized based on the based on the point in time. That means revenue will be recognized at the end of the completion of the project. Now remember what is going to happen. Since you are not recognizing the revenue, it means there is not if you are not recognizing any revenue, that means you are not showing any income, and if you are not showing any income, you are not paying any tax. So is it possible that the income tax authorities might consider this objectionable, because the income tax authorities may still feel that the entity should have recognized revenue following the overtime, and therefore should have shown the income in the respective financial years instead of showing the income only at the end of the year. So it is possible that the income tax authorities might find this objectionable, and therefore it is possible that they might consider levying of the interest and penalty. That is what we have to also understand from the perspective of the ICDS. And thereafter we will come to the impact of revenue recognition on point in time basis on computation of tax liability, and can the tax authorities make out a case of hiding of income and avoiding tax, thereby levying interest and penalty, as I just mentioned. Finally, what we will do, we will test the entire IndAS 115, our treatment of revenue recognition from the perspective of the IndAS 1, which is on the presentation of financial statements, and the qualitative aspects of IndAS framework, and of course fair and presentation of fair and true and fair view. So friends, this is the plan that we have in this session. From time to time, I will keep leaving it open for all of you to add something that you may like to. So please feel free to say something or add something or contribute something uh, about whatever that we are discussing. It is not necessary that you have to agree with me. You can always disagree with me. As a matter of fact, that is what the objective is, because only when you disagree, then only we can really do the dissection of the entire IndAS 5115 and come to a conclusion as to what is the right mode of revenue recognition in case a property, in case a flat is being sold or an office is being sold by a builder, where the project is under completion, and the final delivery of the end product will be at the end of 2 years, but the builder is going to complete certain stages for which he would keep on receiving payments also. So open to all of you in case if you have to say something from your side. Anyone? Okay, so if there are no points, then we can move forward. So let us understand from IndAS 1, that is presentation of financial statements. Now, what is the purpose of financial statements? Clause 9 of IndAS 1, which is on presentation of financial statements, uh, states the purpose of the financial statements as financial statements are a structured presentation of the financial position, that is balance sheet, financial performance, that is P&L, of an entity. The objective of financial statements is to provide information about the financial position, financial performance, and cash flows of an entity that is useful to a wide range of users in economic decisions. Financial statements also show the results of the management's stewardship of the resources entrusted to it. So that is what we need to focus on, friends. That what is the purpose of the financial statements? Purpose of the financial statements is that the user of the financial statements are able to take a decision, take an economic decision based on the information which are given in the financial statements. Meaning what? Meaning the informations which are given, information which is given in the financial statements have to be correct, so that the user of those financial statements is able to arrive at a right economic decision. We also look at the financial statements from the qualitative aspects. Qualitative aspects as provided in the IndAS framework. So IndAS framework, friends, also talks in terms of the certain qualitative aspects. Now what these qualitative aspects are, and that is what we have to again remember and keep in mind, because once we keep this framework, these qualitative aspects provided in the framework, it would be very easy for us to differentiate the impact of doing the revenue recognition based on point in time or based on over time. And once we have this understanding of the qualitative aspects, it becomes very easy for us to know as to what should be the right approach for revenue recognition under IndAS 115. So what are the qualitative aspects? The number one is the understandability, and which of course is quite obvious, relevance, reliability, and comparability. So the financial statements got to be understandable. The information which is given in the financial statements got to be relevant, and there must be reliability. So whatever numbers are being given in the financial statements, they must be reliable, and they must also be comparable. So from period to period, whatever numbers are given in the P&L or in the balance sheet or in the cash flow statement, they must be comparable. They must be comparable. So that is what are the four qualitative aspects. When it comes to relevance, relevance is connected with the materiality. Meaning what? Meaning what is material? Material is something which is going to influence decision by user of the financial statements, and that is what has to be kept in mind when presenting the financial statements. Now, how will the reliability be achieved? For reliability to happen, there are five factors that needs to be taken into account, or that these five factors need to be followed for ensuring that there is a reliability. So what those five factors are? Number one is faithful representation. फेथफुल रिप्रेजेंटेशन का मतलब क्या है? फेथफुल रिप्रेजेंटेशन का मतलब ये है कि जो भी आप फाइनेंशियल स्टेटमेंट्स में नंबर दे रहे हैं, whether the CEO of the company or CFO of the company or the accounts team of the company or the finance team of the company or the board of directors of the company or the audit committee of the company, so whatever numbers when they are presenting in the financial statements, this must be a faithful representation. Meaning what? Meaning the CFO, the CEO, the accounts team, the finance team, the board of directors, the audit committee, they should have the confidence, they should have the conviction that whatever numbers are being presented in the financial statements are the right number, and are these numbers are being presented in a manner in which they should be presented. So that means all these people that I have just spoken about, they should not have any doubt in their mind about the numbers which are presented in the financial statements, or the mode of presentation in which they are presented in the financial statement. So all these people got to have a confidence, and that is the meaning of faithful representation. Then the second thing is substance over form, and that means what? That means the what is important is the purpose is more important and not the form. So whatever information is given, it got to be, the focus should be on the substance and not on the form. Neutrality, that means the whatever is presented in the financial statements, it should be free of any kind of bias. Prudence, we all understand very well. And completeness, fifth one is completeness, and that means the financial statements which are presented or which are given to the shareholders and other users, they must be complete. That means whatever information is given in those financial statements, it should be complete in all respect. That means the user of those financial statements should not feel the need to refer something else as far as the company's financial performance is concerned, company's financial position is concerned, or company's cash flow is concerned. So friends, these are the four qualitative aspects, and these are the five factors that need to be taken into account so as to ensure that the numbers and the presentation of the financial statements is reliable. अब ये जो चीज़ है फ्रेंड्स, हमको ध्यान में रखना बहुत ज़रूरी है. ये चीज़ हमको ध्यान में रखना बहुत ज़रूरी है. क्यों? क्योंकि सवाल ये नहीं है कि हम कौन सा मोड ऑफ रेवेन्यू रिकॉग्निशन यूज़ करते हैं, कि हम पॉइंट इन टाइम के बेसिस पर रेवेन्यू को रिकॉग्नाइज करते हैं, या फिर ओवर टाइम के बेसिस पर रेवेन्यू को रिकॉग्नाइज करते हैं. सवाल ये नहीं है कि इसमें से कौन सा करें. सवाल ये है कि ये दोनों के क्या इम्प्लीकेशंस हैं, और क्या जो भी हम मोड यूज़ करें फॉर द रेवेन्यू रिकॉग्निशन, वेदर पॉइंट इन टाइम और ओवर टाइम, we need to ensure that the qualitative aspects as given in the IndAS framework, those are tested, those are complied with, and that is what is important, and that is the reason why I have discussed with you the qualitative aspects of financial statements as per IndAS framework. Another thing that we also need to focus, and we all know, and that is clause 15 of IndAS 1, that is on financial presentation of financial statements. Now the clause clause 15 of the IndAS, clause 15 of IndAS talks in terms of presentation of true and fair view and compliance with IndAS. Now, what does it mean? So the clause 15 of IndAS 1, which is on presentation of financial statements, it speaks as to when the financial statements would be presenting true and fair view and complying with the IndAS. So what it says, financial statements shall present a true and fair view of the financial position, financial performance, and cash flow of an entity. Presentation of true and fair view requires faithful representation. Faithful representation. That means whatever you are presenting in the financial statements, you are confident, you know for sure that whatever is being presented, the numbers which are being presented are correct, and the way in which they are being presented is also correct, and that is the faithful representation of the effects of transaction, other events and conditions in accordance with the definition and recognition criteria for assets, liabilities, income, and expenses set out in the framework. So therefore, how to come to a conclusion whether the financial statements are presenting true and fair view? So according to this clause 15 of IndAS 1, the application of IndAS with additional disclosure when necessary is presumed to result in financial statements that present a true and fair view. So that means whatever is given in the Indian accounting standards, IndAS, if the financial statements are presented as per those IndAS and the necessary disclosures are given, in that case it can be presumed that these financial statements are presenting the true and fair view of the organization. Let us look at now specifically provisions of IndAS 115, which is revenue from contracts with customers. So what is the objective of IndAS 115? The objective of this standard is to establish the principle that an entity shall apply to report useful information to users of financial statements about the nature, amount, timing, and uncertainty of revenue and cash flows arising from a contract with a customer. So that is the objective of IndAS 115. Now, how this objective is met? So to meet the objective of IndAS 115, the core principle of this standard is, and that is where I would like all of you to please pay attention and focus. The core principle of this standard is that an entity shall recognize revenue to depict the transfer of promised goods or services to customers in an amount that reflects the consideration to which the entity expects to be entitled in exchange for those goods or services, right? And that is what we got to remember and we got to keep in mind. And let me repeat it once again for the sake of clarity of everyone. To meet the objective of IndAS 115, the core principle of this standard, that is IndAS 115, is that an entity shall recognize revenue to depict the transfer of promised goods or services to customer. So that means as and when the entity is transferring the goods or the services as promised, for which it is receiving the revenue or the payments from the customer. So IndAS 115 says that the recognition will have to be done so as to depict this completion of the obligations by the entity and receipt of the payments from the customer. An entity shall consider the terms of the contract and all relevant facts and circumstances when applying this standard. So whatever is mentioned in the agreement that the entity has signed with the customer, so all the terms which are entered into the agreement, all those terms will need to be kept in mind while doing the revenue recognition by the entity. The clause 5 of IndAS 115 talks about the entities where the IndAS 115 is not applicable. So obviously there are certain accounting standards which talks in terms of specific transactions. So when there is an accounting standards available for particular types of transactions, in case of those transactions, IndAS 115 is not going to be applicable. So which are those transactions, those types of transactions? So lease contracts. So all the lease contracts are governed by IndAS 117, which is on leases, and therefore in case of leases, IndAS 115 will not be applicable. Insurance contracts. So in case of insurance contract, there is IndAS 104, which is on insurance contracts. So all the insurance contracts are specifically covered by IndAS 104, and therefore to the insurance contract also IndAS 115 will not be applicable. Then financial instruments and other contractual rights, then non-monetary exchanges between the entities in the same line of business to facilitate sales to customers on potential customers. So to such exchange of non-monetary exchanges, the IndAS 115 will not be applicable. Now let's look at, there are certain terms which have been defined in IndAS 115 in the Appendix A, which is part of the IndAS 115. So one important aspect that we need to understand, or we need to have a look at, as given in the IndAS 115 as part of the defined terms, is performance obligation. So what is the meaning of performance obligation? Because all said and done, the confusion is always in the minds of the people as to whether the recognition should be done over the time, or should the recognition be done point in time. Now, based on my discussion with professional colleagues, I have understood that there is a common understanding that all the transactions all the transactions in case of real estate business need to be recognized at the end of completion of the project, when the asset in question is handed over to the customer. Now, is that really so, or it is different? That is what we need to focus on. And for that, we need to understand the definition of performance obligation. So how is performance obligation defined in IndAS 115? It says a promise in a contract with a customer to transfer to the customer either a good or service, or a bundle of goods or services that is distinct, or a series of distinct goods or services that are substantially same and that have the same pattern of transfer to the customer. Now this is, friends, is what is applicable in the case that we are discussing. The case that we are discussing is what? The case that we are discussing is that you are purchasing a flat. That flat is going to be delivered to you after 2 years. During these 2 years, the builder is going to complete the flat in these stages, and those stages has been entered into the agreement, and for completion of these stages, you as the customer will be making payment to him from time to time. So that is what is performance obligation. So contrary to the belief that the delivery happens only when the flat is given to the customer, what this definition says, that the agreement has incorporated certain stages of completion. So as and when a particular stage of completion is done, that means that particular stage is delivered. That particular stage is delivered, and therefore the customer is making a payment to the builder, and therefore in this case the recognition of the revenue should not happen following the point in time. Rather, the recognition of revenue should happen following overtime delivery. So what is overtime and what is point in time? So as I have already explained, point in time would mean sale of a ready flat. Point in time would mean sale of a ready flat. So there is a builder. The builder has completed the project. All the units of the flats or the offices are ready with me, with the builder, anyone can go to the builder and look at the flats, look at the offices, and whichever flat or the office they like, they can go to the builder and tell the builder, this is what I want to purchase. Builder will tell the customer the price that he has to pay for that particular flat or for that particular office. The customer will make the payment, and the builder will give the delivery of that office, or will give the possession of that office or that flat. So that is point in time. Now, what is overtime sale? Overtime sale is sale of a flat or commercial office when the customer books the flat, executes sale deed, agreeing to make payment to the builder in a phased manner, linked with the stages of completion by the builder. The agreement is registered with the office of the registrar. Now, this is the second mode, and that is mode of delivery, that is overtime. That delivery overtime. That means it is understood, it is generally thought that delivery is only when the flat is ready and the possession is given to the customer. But what IndAS 115 talks not only of this mode of delivery, IndAS 115 also talks in terms of delivery which is in stages, which is overtime, and that is where you sign an agreement. The builder will keep on completing the project in stages. For every time he completes one stage, he will raise an invoice on you as per the agreed terms, and you will make the payment to the builder for that particular stage to be completed. According to IndAS 115, when that is applicable, that is overtime delivery, the real estate entity should do the recognition of the revenue as and when a particular stage is completed, and payment for that particular stage is received from the customer. Because as per IndAS 115, that is that the entire project becomes a bundle of goods or services. The entire project becomes a bundle of goods or services. So every time a particular stage is completed, that means that particular stage is delivered to the customer. Okay, let's look at another case. Now, before we take another case, let me again throw it open to every one of you. In case if you have any question or you have any doubt, or in case you would like to add something, please go ahead.